Hey, check it out. It's Christmas. What do you think is under the tree? You know, boys and girls everywhere, adults, men and women, they're looking for the best presents. But I'm gonna tell you right now that there's one present in particular that will do better for your financial future than anything. You know what it is? It's real estate, but not a cute little model house. I'm talking about the 5 tax deductions, 5 of the biggest tax deductions that come when you buy real estate. And if you feel like you pay too much in taxes, you don't own enough real estate. Let me show you.
One shot, now the future is yours. Go! I'm turning dreams into reality. Yeah, it's one shot, now the future is yours. Go!
Chestnuts roasting on the open flame, fire, however that song goes. Check it out. It is like near the end of the year, and you, like other people, might be scrambling thinking, geez, what can I do the last few days of the year before December 31st so I can get a break on my taxes that are gonna due in April? And I gotta tell you, good news and bad news. Bad news is there's not a lot that you can do. The good news is now is actually the time to prepare, have a game plan on crushing it in real estate. And in today's video, I'm gonna show you how to make the next year's tax bill way, way, way lower. Listen, I got a problem.
Houston, we have a problem.
I pay a lot in taxes. And so I actually don't wait until December to actually prepare for April next year. I'm actually doing it every single month. In fact, I have a team of people that I've hired, and they've got one job.
You had one job.
Your one job is to help me pay my fair share in taxes, which should be a lot less than the maximum that the government loves to extract from me. So today I want to talk about real estate, and specifically 5 ways that real estate will help you reduce your taxes. You've heard that real estate has some of the best tax breaks, but is that still true today, especially with all the new legislation and all the things that have changed? Let's find out. From Investopedia, investing in real estate continues to be one of the best ways to build wealth and cut taxes. Benefits include the ability to recover the cost of income-producing property through depreciation, to use 1031 exchanges to defer profits from real estate investments, and to borrow against real estate equity to make additional investments. In other words, real estate has 5 action-packed ways that you can cut down or defer taxes, and I'm going to share all 5 of them with you right now. Numero uno, depreciation deduction. And you might be thinking, wait a second, Kris, depreciation. I hear that word everywhere, but what does it really mean? Let me break it down for you. This is so cool. So you realize that when you buy things that they wear down, and then they're gonna need to be replaced. And the IRS and the government believe that if you're using something for business, which by the way, real estate is a business, and it's gonna wear down, that you should somehow get some kind of tax break. So the government said, well, this is complicated, like a house, like the carpet's gonna wear out, and then the drapes, and then the paint, and then the windows are gonna have to be updated. And then, man, how do you actually do that? You know, let's just make it crazy simple. Let's just say that everything goes bad over 27 and a half years. So here's the way it works. I buy a house for $250,000, and that property, I get to divide it by 27.5 years. And guess what that's gonna do? That's gonna tell me how much money I get to write off every year. And guess what? It's not a small amount. Oh, check it out. Okay, so I take $250,000 right here, and I'm gonna divide that by 27.5. And guess what it tells me? It tells me that I'm gonna get a tax break of $9,090 every single year on this property. Now let me tell you why that's kind of cool. You see, I didn't just buy this property for fun or because I wanted an expense. I'm renting the thing out. And guess what my renters do? They give me rent, and I take the positive rent after I pay the mortgage, and I've got income. Let's say I'm making $500 a month. Okay, I have positive cash flow of $500 every single month. I'm gonna do that for 12 months. And what does that add up to? Well, 500 times 12 equals $6,000. Wait a second, I have a $9,000 depreciation deduction. That's gonna cancel out all of my cash flow. That positive cash flow literally is received tax-free to me. And guess what? I still have a balance of $3,000 left over. And you know what that's gonna apply to? My job. Let's say that at my job, I'm making $70,000 a year. Not anymore. Now, to the government, it looks like my job only pays me $67,000 because the first part of my depreciation deduction went towards eliminating the taxes I was going to owe on my positive cash flow, and the rest of it lowered my income, hence paying less in taxes. Psst, Kris, what if it's not an investment property? What if it's just my own house? The government doesn't care. Guess what? You literally get to depreciate that asset and write it off against your income. Psst, but Kris, does that mean that you have to own the property for the entire year to get that benefit? It is prorated. Like if you buy the house in December and you only own it for 1 month, you're only going to get 1/12 of the benefit, which is why part of this video is queuing you up for what you need to do all through this next year, even right now, so you have even more tax savings next year. Buy more real estate right now. Oh, Kris, I have a problem. I bought this house. It went up in value. Now I want to sell it. But if I sell it, I'm going to owe all of this tax money on the capital gains to the government. Like literally, it's gone up hundreds of thousands of dollars. I don't want to write the government a check for $50,000 or $100,000. Is there any way around that? There is. That is the second of 5 tax benefits of owning real estate. It's called the 1031 exchange. The 1031 exchange, named for Section 1031 of the Internal Revenue Code, allows investors to defer taxes by selling one investment property and using the equity to purchase another property or properties of equal or greater value. This exchange must occur within a specified period of time, usually 6 months. And I'm going to tell you what it really means. It means that you can make grundles of money in real estate, but never have to realize the profit. You could literally sell this house and trade it for 2 more, for 5 more. Later sell those homes and trade them for 10 homes, for 20 homes. And over generations, this is why you have people like the Rockefellers that literally pass fortunes on to the next generation, meanwhile living off of tax-free cash flow. Hold the phone, Kris. I own a house, or I plan on buying houses, and you know what? I don't want to sell it. How do I get my tax break then? The third benefit is called borrowing against equity. Did you know that you can take equity out of a house and it's a non-taxable event? Check it out. I bought this house, I own it, it has piles of equity. I go to the bank and I say, give me a home equity line of credit, or I want to do a cash out refinance, and the bank says, sure, Kris, here's $100,000. I still own the house. Maybe I'm living in it, maybe I'm renting it. Do I still actually owe taxes on this $100,000 that I took out? The answer is no. You actually can keep the asset, take some of the money out of it. It is non-taxable. What can I do with this? I can buy more houses, I can buy businesses, I could go to Disneyland, but hopefully you'll do something constructive. And it turns out that that is not the only tax benefit in a house that you're living in. Did you know in the last 5 years that you've owned your primary residence, if you've lived in it for even just 2 of those 5 years, you qualify for something called deferring taxes on the sale. Literally meaning on your own primary residence that you live in, if you've lived in it for 2 of the last 5 years and then you decide to sell it, and let's say, I sold it, here's my $100,000 or $200,000 or $500,000 of growth on it, do I have to pay capital gains tax on this to the government? And the answer, no. You know, they always say that a person's biggest expense is the home that they live in. Because think about it, it's probably more than your iPhone bill every month or Android phone, it's bigger than your car payment. Your mortgage might be the most expensive thing that you pay money towards every single month. And you know what? Month over year, that can add up to a fat stack of cash. Problem is that if you have a typical 30-year mortgage, did you know that every payment that you make in the beginning, the majority of it, doesn't go towards paying the house down? The bank has front-loaded all of the interest. They, in other words, have an amortization schedule where 90% of your monthly payment on your mortgage does not go towards paying your house off. It actually goes to interest directly to the bank, which means that after 15 of your 30 years of owning it, it's not half paid off. It's maybe like a third paid off, and it only accelerates getting paid off at the end of the journey. That means that every month you are paying a buttload of interest. Fortunately, the government has a 5th deduction that I want to talk to you about today. It's called deducting the mortgage interest. Did you know that in most situations, unless you're making like crazy amounts of money, the government is actually going to allow you to deduct all of your interest that you paid towards your house? And for most people, that ends up being not a little bit of money. That ends up being huge, huge, huge savings. In fact, by the time I got 25 properties and I was making multiple six figures, I didn't have to pay taxes on any of it. And you know why? Because of the depreciation, I was writing off the interest, I was taking advantage of all these benefits. You add all of them up, and if you ever have a tax burden in your life, you will be grateful to own real estate, and you'll want to own more and more and more, and maybe thousands of properties like me. Let's be honest, the best gift that you can give yourself this Christmas is to buy real estate now so that your next year's tax bill will be significantly lower than it actually has to be. Literally, now is the time for you to buy real estate. But that's not easy for some people to do. Sometimes easier said than done. Unless you're partnered with an expert that's done $1 billion worth of transactions, thousands of homes, has a perfect turnkey system. If only such a person existed. Come on, it's me. I don't know if you got that as facetious. I'm the guy, yes, I'm the guy that you can do that with. There's a link below and I'll actually show you how you can partner with me. You can take money that's stashed maybe in a 401k or an IRA, maybe it's equity in a home. I'm gonna show you how to make it totally passive and turnkey. I'll help you go to the very best markets in the country where we get the best cash flows, the best tax benefits, and where hands off, we get to grow and multiply that investment into really, really high ROI. So it's not really just about reducing your taxes. That is a great, fantastic gift. It's really more about the gift of wealth and generational wealth. What are you doing for the next generation? Has retirement just been about you and your immediate family? Or after you shake off this mortal coil and die, have you left something behind that continues to grow and do tremendous good? I know I have. But I'm still here, I'm still young, I'm still building that wealth, and you can build that wealth with me as well. So if you want to learn about that, if you got something stashed in a 401k, IRA, equity in a home, and you want to learn how to get prepared so that next year you're playing your cards right to the IRS, click the link below, get with me and my team, let me explain how it works, and I will help you reduce those nasty taxes. You know, the best gift I gave myself at the start of my financial journey was focusing on investing instead of consuming. It wasn't about a bigger house. It wasn't about a nicer car. For 5 years, I didn't allow myself to own anything nice. I just kept putting it into investment after investment after investment. Today, and for the last 15 years, I can pretty much own and buy anything that I want. And that's because of how my journey started. In fact, I realized the other day that my CEO had not been on that journey with me to see all of my first properties. So I picked him up in a limo, I took him around to the properties, and if you want to join me on that journey to see what it started out as, what it might look like if we partner, click this video and let me show you how it all started. All right, dude, check it out.
This is it.
This little guy right here, kid you not, I was basically living for free in this house. My wife and I had the 3-bedroom all to ourselves upstairs. We rented out the basement, and the 550 at